All right, so we'll give everyone a quick update on our progress. So obviously, we're going to talk to you about our discovery at Nisk, and it's a polymetallic discovery. So think of it as generally 45% copper, 40% PGEs, platinum, palladium, 10% gold, and 5% silver. And there's a second deposit that's sort of nickel and copper combo. But we'll talk you through it as we go forward. Not going to tell you anything we don't believe is true, but as always, you should do your own due diligence. Um, Quick summary: we're well financed. Just reported 33 million in cash in the bank at the last quarter, just end of October. So that's good. We're good through the end of 2026. We're in the midst of a 100,000 meter drill program at the moment. Obviously, we got that money because we made an amazing discovery. We'll talk more about that, but we're looking at somewhere between 8 to 13 million tons of 7 to 5% copper equivalent already on the high grade copper deposit, and probably another 8.5 million in the lower grade 1.25% nickel deposit. So you can see some of the profile investors: Robert Friedland, Rob McEwen, and Gina Reinhardt. Got about 15 billionaires in the deal, and it's been that's how we've been able to fund in this a difficult financing market up to this point. The gold stocks and producing ones are getting a bit more love, but still a struggle for most of the other miners. Location-wise, we're in Canada, in northern Quebec, and it's one of the best places in the world for critical minerals. We'll walk you through that. Quick snapshot on the company. I mean, a fairly standard Canadian company in that respect. A couple 100 million shares out. The big thing to take away here is the key stakeholders own almost 50%. Myself and my family own about actually around 16% now. So significant interest. We've put a fresh 5 million in over the last 2 years. So I think there's a really big alignment of our critical shareholders. The top, 8 own about 50%, and they've all written big checks over the last 2 years. I think it's always good to see the guys that have that big shareholder positions still writing checks on a deal. Gives one comfort. Whereabouts are we at in this world? Well, we're basically in Quebec, in northern Quebec. It's about a third of the way up. About maybe 12 hours from Montreal, about 2 hours from Chibougamau, 2.5, and that's where there's a nice mining university there. It's a very major resource town. We're outside the village called Namaska. It's got about 1,500 people. It's probably most well known for being the home of the James Bay Cree, where probably the most well advanced First Nations in the country, and they've a real pleasure to work with. They've been helpful. We'll talk about that. There's 3 reasons to love Quebec. First is the infrastructure. We're located right off of Route North, so you can drive right off a major highway right to our sites, right to our rigs. And across the road is a Hydro-Quebec substation. There's actually power on our property, which is great. We're about 8 clicks outside the village of Namaska, which is a regional airport. Also has accommodation and food for our guys, so it's very well set up to roll into production. So that's good. The other thing I like about Quebec is they've got some amazing fiscal incentives. So when we raised that 50 million in February last year, the investors paid $1.45 a share, and the company got $2.50 a share in cash. So that's generally what you're able to achieve. Almost get on the exploration stuff, just pure exploration, it's almost 2 for 1. On the overheads, you don't get on the SG&A, you only get there's just a straight dollar, but the combo is pretty powerful. So it's really amazing. Also for development. So if this mine costs 300 to 400 million to get the first phase going, half that's going to come from the federal and provincial government. So there's nothing quite like it anywhere else in the world. Let's talk about the discovery itself. So we started as a nickel discovery. On the top left, we can see the MRE from a couple of years back, had about 7.1 million tons of the 1.1%. It's probably going to about 8.5 million tons, probably around 1.25 right now. And looking for more nickel, we stepped out and drilled what we thought was a nickel target, and voila, we hit the Lion Zone. The Lion Zone has just been the gift that keeps on giving. It's a jewelry box. There's top 5 holes there. That's $1,200 rock you're looking at there, basically 21 meters of almost 8% copper equivalent. And that's at very low PGE prices that are we're well in excess of that right now. So this has been what transformed us into the top mining stock in Canada in 2024. And it really sort of powered our way through this financing as well. So we're continuing to grow the Lion Zone, and we just reported more strikes than that yesterday. I think the next 2 slides are sort of why we were able to raise the money. And basically, what we did was we looked at the other polymetallic discoveries around the world, what they're trading at relative to what they've found relative to us. And if you look at the math, you'll see that we're trading at probably a 20 to 30% discount to our peer group. So you take that and sort of say, okay, well, they're cheap. I like that. If I'm an investor, I want to buy stuff that's got value. And the second thing is, well, what's left? Is there going to be some growth? And we think there's going to be enormous growth here because what we found was an orthomagmatic deposit, and these things are super rare. Maybe about 20 of them in the history of the world. They're literally the world's greatest mines, the most profitable mines. Norilsk in Russia is the granddaddy of them all, but Voisey's Bay, Marinsky's Reef, these are all massive, super profitable discoveries that have been commercialized. So each of these orthomagmatic discoveries has been producing for many, many years. They generally have excess of 1 million tons of metals in the ground, and sometimes more than 10 million tons. The interesting point, Oktябrьский here in the center, you might notice it here, that's that big word that you can barely pronounce. That's basically the heart of Norilsk. And the grades there are basically very similar to what we have at Lion. So what's interesting with all these orthomagmatic deposits is that for every ton of copper sulfide you find on average 5 tons of high-grade nickel sulfide. So right now at Nisk, we've got about 1.5 copper to 1 of nickel, soon to be 2 copper to 1 nickel. So we're growing the copper resource, which is great. But ultimately, what does that mean? Well, we're going to ultimately find a lot more nickel sulfide. We think we've identified where that is now, and that could lead us to become a very much a world-class project. With 10 million plus tons. We think that's very possible. So that's why I think people see it as a cheap deal. It was, very underpriced relative to our peers and has all this explosive upside on the discovery side of things. This is why we were able to get the capital, just to see how big we could be. The team, obviously, you need sort of 2 people at this stage in a mining company's life. You need people like me that can pitch the story, raise the money, and invest dollars. Then you need people that can find, the project. So we've got a guy in the middle here. His name is Steve Beresford. He's probably the top polymetallic scientist in the world. If he's not, he's certainly in that conversation. He was formerly chief geo at First Quantum, and then he went to MMG as chief geo, and then to IGO as chief scientific officer. Spent several hundreds of millions of dollars looking for polymetallics like this. So that's why he's such an expert. He's spent the money and he's found things successfully. Joe Campbell on the bottom left. He runs a company called GeoVector, and they're one of the top 2 or 3 geological consulting firms in the country. And both Joe and Steve were trained at Western Mining. So Western Mining was one of the iconic Australian companies that's now owned by BHP, but equivalent to the Canadian Inco, I would say. And so that Steve sort of has the geological theories. Joe gets the practice of executing it and growing the resource. So it's been a match made in heaven for us. We've been able to really sort of scale this thing with this team, and that's been fantastic. In the middle of these 2 guys is our newest director, Seamus O'Regan. So Seamus used to be a federal minister of natural resources in Canada, and previous to that, federal minister of Indigenous Affairs. So as we progress towards becoming a mine, having those political connections will be super helpful for us as we look to scale our operations going forward. I think everyone is probably listening to these presentations today with this concept in mind, is that the commodities are about to have their day. Equities have had a run, and they're still having their run, but, they seem very toppy for me. The big 7, one would think that the commodities are about to rip, and you can start to see it in gold and silver and somewhat in uranium, and copper starting to push forward now. So I think, when it does rip, you can see there's going to be a multiple scaling here. And then within our own, the commodities that we're actively exploring for, since we did our financing in February of last year, we're probably up over 30% across the board. You can look at the numbers on the screen, but you can see that, the copper number is probably up to over closer to 14% right now. These slides are a little bit old, but it's been a very healthy commodity cycle for us. So I think the big question is, how big will we be? So right now, we're, in terms of an MRE, we have 7.1 million tons, but maybe that's closer to 8.5 now. Analysts say on the copper side, we're 8 to 13 million tons, so close to 20 million tons. Sakatti, which is another orthomagmatic discovery, they were 40 million in their main resource. Now they've increased it to 157, by adding some lower grade materials, and Voisey's Bay 141. I see us getting to, for sure, in my mind, that's caddy size. And can we get to 140, 150 million tons? That remains to be seen. When more success in the drill bit for that, but certainly that upside is there, and you're not paying for it. So that's what you like as an investor. You're looking for that asymmetric upside. So one of the things we recognized this summer was, we didn't have enough land. We believe this is going to be a district play. That's generally what happens with these orthomagmatic discoveries. They'll spread out over several kilometers. And so we felt that while we had 46 square kilometers, we didn't have enough. So we went at strategically to get more acreage, and we ended up putting together we now have 331 square kilometers. So almost 6 times our land package. We first made the acquisition from Lift, and this was key to add some key strategic ground for us. We've identified basically 8 regional targets that we think would be like Lion and Nisk, and we now own 7 of them, thanks to the Lift acquisition. So that's a bull. And then the other key land that we got was the hydrolands, and that's almost all this land that's colored in here where my cursor is. So this was stuff we got from the National Extension, and then we also were able to stake all this stuff in here. So that's key, and we're drilling on that stuff as we speak. We believe fundamentally that the fold hinge, the other half of Lion, is out here. So I would say there's 3 really big opportunities for us to sort of find. But we're continuing to extend the Lion zone, which is what our most recent press release as of yesterday showed. But there's 3 big opportunities in terms of finding a whole other new Lion or a brand new breakthrough discovery, and that would be at what we call Lion Deep over here at Gold 64. This is this green star. Tiger Deep, which is to the right of the Lion, somewhere between 400 and 800 meters. We're drilling a Lion-like structure in there right now, and then out here on the hydrolands, we're drilling the fold hinge. So this is all based on what's driven us to our success right now has been using a technique called Borehole EM. So this Borehole EM has been, really with the adding in our structural geology and the geophysics, it's certainly been a guide, and we've had amazing success adding with that. So the borehole is giving us very strong indications that these next 3 areas here look very ripe. So we're super psyched about getting to those. We're drilling 2 of the 3 now. The third will be the extension that we identified, the biggest extension we've seen to date that we identified here, will be drilled just after Christmas. Metallurgy. There's no point in finding it if you can't take it out of the rock properly. So we've let the market know that we've done some initial work. The first phase showed, up to 93% recovery on this. So we're currently running at, assuming that we'll get 80% recovery. We're hoping to get a full metallurgical study out by the end of January, and that we would expect to. I think we're certainly expecting it to be better than 80%, but let's see what it shows. We're quite confident that this is going to be very recoverable rock, and that's often a concern with the polymetallics, is that can you recover an array of materials like this? And the answer is yes, you can, and it's not that hard. So high grade ones like Nisk and Lion generally recover very well. It's much like the Sudbury footwall deposits. So again, they recovered very well. Lower grade ones, sort of like Chalice or stuff like that, or some of these other projects, more challenging recovery progress for those guys. So thankfully, we've got high grades and are getting their great recoveries. So our milestones, coming up over the next 16 months, I would say, or 14 months, would be ramping up exploration. We've got 5 rigs operational now. The 6th actually starts just after Christmas. We may be adding a 7th. We think we're going to create a lot of resource value in 2 ways. We're going to grow resource by adding more resource. The assays will show us that. Second way we're going to grow is we think we're in a commodity price increase environment. We're already up 30% since we did the funding, so we think that will continue. That will be a bullish set of pricing. We're going to continue to look to add more land. We've already added 600%, so that's good. We're feeling that there's a lot of exploration upside on that land, and we're progressing on that rapidly. We're about to list in the New York Stock Exchange. We hope to get it done this year, but through government delays and whatnot, it makes sense now at this point to do it in January. So we've sent the NYSE yesterday our third quarter results, and they'll review that, and then hopefully that'll be the last step, and we can announce that. We'll have a MET study out in January. That should be very positive. We think that'll show higher recoveries than we're currently forecasting. So that will mean instantly, if we're using 80% recoveries, the estimates are all based on that. So if we went to 88%, for example, simple math, 10% increase, well, you'd instantly increase your resource by 10%. So that's pretty profound because it doesn't cost us much other than this study to do that. So I think that's pretty exciting. The spinoff on Chilean Mills, we're hoping to get that listed before the end of the year. It's in on the, I would say, the 2-yard line right now, waiting for that to happen. Final couple things to talk about is we've been progressing a feasibility study with CVMR on the nickel side of the business. This, in case we'd be looking at building a nickel powder plant in conjunction with CVMR. They've paid for this feasibility study. We'll expect to produce that in sometime in H1 of next year. And then finally, on global opportunities, we did pick up a very interesting land package in Saudi Arabia. We got invited by the Kingdom of Saudi Arabia to go down there because of our exploration success. They're looking for strong explorers. And as a result of that, they've also introduced us to their top 5 family offices who have, net worths of between 50 to 110 billion. So we're progressing in Saudi Arabia. We expect to have some news on that at the FMF conference in Saudi in mid-January. And we'll update everyone there. But I would say, the Saudi opportunity is, from our perspective, like Nisk was 4 years ago. It's a seedling. It's a seedling with that hopefully we can grow into an oak and then ultimately a forest. But it's definitely exciting. So we're looking forward to that. So it's going to be an action-packed news event-filled next 14 months, and that's Power Metallic. From a investment perspective, what's interesting is that while we raised the money at $1.45, I would say this to investors: stocks come off about 30%. I guess just frustration that we didn't grow quicker. The resources are, there's no exact pathway here. You have to go through the process. We're quite happy we've executed. We got 6 times the land. We're continuing to grow the Lion resource. We're super cheap relative to our peers. We're well funded. We don't need to raise capital. We're about to move to a major exchange. So I would say this is a tremendous time to be looking at Power Metallic. Anyway, I'm going to turn it back over to our host, Julian, and look to answer some questions if there's any from the audience.
All right. Thank you very much for the presentation and the update, Terry. There's a lot to discuss about. There's a few questions coming in, and we're expecting more in a few minutes. If anyone has some, please, it's the time to ask is now in the Q&A. One thing that is important for an exploration company is obviously resources. When is it time to stop the drill? When it's time to go on? When is enough? So you raise flow money in Quebec. So if you can talk a bit of the restriction of what you have to do with that money, why you can raise at $2 something when the share price is lower. And then if you can discuss about also, second question, obviously, what's happening with the reserve? How much is, when is it enough for an exploration company?
Yeah. So on the flow through stuff, you basically, when you raise the flow through funds, you need to put it into exploration. There's a certain category of drilling. So we're doing that. We were able to get on this last round 1.95 times the price. So we got $1.45 from the investor, and they bought from the front investor in this sort of a time package where they invested at $2.83 a share, and the very next second sold it to our back end investor for $1.45. The reason why they did that, the financial investor in the front, was they got 100% tax rate off on the 283. They got a bunch of tax credits, and they got a charity donation as well. So that made for them basically reduced their 54% top marginal tax rate to 42. So like a 12% gain or so. So that was their incentive to do it. For the investor, obviously they put in at $1.45, but they had 283 working for them. That's their incentive. And of course, they like the fundamentals of Power Metallic. That's why they did it. And then for the governments, obviously what they're doing is they're channeling investment into critical minerals, which is a strategic objective of the government. So that's the thought process behind that type of financing package, which is only available to the most part, to the maximum in Quebec. It's available in other parts of Canada, but not as well. So there's that stage one. On your second part of your question, like when do you stop? So I would say, probably at the end of next year would probably be a good. We're moving forward on the development stuff, like on a long form environmental staging, whatever. generally, I would think these types of mines generally get put in production in 5 years, which is rocket fast, because the reason why is they're so lucrative. This thing will pay out, we believe, in a year. So generally speaking, the reason why mines don't get built faster is, they're maybe a 7 or 8 or 10 year payout with a lot of capex. So you got to be bloody sure that's going to be there. So they tend to be much more pedantic about the due diligence. But when you got something that's going to pay out in a year, there's a lot of room for error there, and that's what drives the investment. So in this case, we're very lucky that we've got that type of high grade, very lucrative deposit. Or
Exactly. And continuing on this idea, so basically, for example, I would be taking a gold project. So you could have, for example, gold effect. So basically, if you have a good intersection, you don't know if you really have it outside or so on. How does that compare when you have a polymetallic project like you and you get 8% of copper? Is that next to it back to zero? What is the interpretation behind?
Yeah. So that's what we talked about in the metallurgical recovery. So what you want to know is, okay, what of this 8% of this polymetallic mix, what can we recover? Because each one will recover somewhat differently. But we're right now assuming an 80% recovery, and I expect we'll probably do 10+% better than that in the actuals. But let's just say using 80%. So at 80%, that would mean that's probably the face value of the rock is probably around $1,100, but maybe the net recovery is around 800, something in that range, 900. Your cost of maybe producing something like that, somewhat less than 100. So super lucrative. Okay. So you're always thinking about cost per ton, revenue per ton, and cost per ton. So that's the whole driver in mining. So you want to have the biggest spread possible in terms of your revenue versus your cost.
And adding to that, there's two deposits, Lion, Nisk. When you say feasibility study was first on the Nisk main nickel body, should shareholder expect that if at one point a feasibility englobing, for example, both of them, or
there'll definitely be we've said to people that we're going to spend the year of 2026 proving up more resource, and then we'll probably get to a pre-feasibility, or a PEA for sure, probably end of 26 or Q1 2027. So that would be
and then would that PEA be we do a complete separated operation, or actually it's like an extension or an expansion of capacities from what you have at the Nisk?
It would wrap them both together. Yeah, at that point, it would see it as a stage thing. Obviously, the way this thing will work is that you will build around the Lion first, because that's going to be the most lucrative rock. And then at the end of it, once you've got a facility already up and operational, you'll be able to go from the $800 rock to the $200 rock. $200 rock still makes money, especially if it's all paid for, right? Because now you're just lifting it. So at that point, it's all paid for.
So then you're adding a long tail positive cash flow to expanding mining life.
And what we expect is, we don't think Nisk we stopped looking for the nickel. It's not that there isn't a lot more nickel there, and we think we've identified a structure underneath Lion that could be the mother of this thing. Because the way these things are made, they are nickel sulfide ore bodies. And what happened is that the mother or the father, the parent of this Lion zone, is underneath there somewhere, and we haven't found it yet. And it's going to be rich, because you don't get a Lion zone of 7% copper equivalent by having a 1% nickel. It's just not mathematically possible. So it means that this nickel zone that we find, if the math is right, is going to be north of 2% nickel, north of 2% copper. Could be something biblical. So that's why it's such a asymmetric upside in this, is that, hey, we've got we believe a very nice mine right now, already proved up. Now the question is, how big will it be? Most of these tend to move to becoming world class. So that leads multiples and multiples from where we're at today.
Perfect. Discussing a bit of the Chilean metals spin-off that's going to be coming very soon. Can you tell us a bit about how are you planning to fund this company? Is it going to be an all new C-suite? What's going to happen with it?
We'll be bringing in some of the power metallic people to run it, but they'll run it separately, of course. We'll have an independent board. We'll probably do a $4 million round in early next year, I expect, at this point. With probably a couple million invested by Power Metallic and a couple million invested by we'll first go back to our core shareholders, and I think that it won't make it outside that is my guess. So because it'll be pretty attractive paper, and then what they'll be doing with it is there are basically two major opportunities within that company that is our very exciting Chilean operations, which are right beside the Candelaria mine that show a lot of promise. We've done a bunch of work there with Fleet, and we've identified a number of key structures there. Codelco and Rio Tinto have been exploring like crazy around us. That's caused a lot of major interest in the area, so that's exciting. And then, of course, we've got our Golden Ivan project in the BC's Boulder Triangle, and it's very exciting as well. Very silver and gold with a copper kicker. So we expect to drill that in May of next year. So it'll be two really exciting exploration plays with a lot of meat around them.
Perfect. And last three questions. So first off, did we already pass the deadline to buy Power Metallic shares and be part of that spinoff or not?
Yes. Yeah. The Power Metallic shares have been spun out as of February. So yeah, there's no additional spinouts happening.
Perfect. That's clear. Second of all, Gerard has an interesting question, and I think the previous presenter, we had the same question 4 years ago. He's asking, with the share price being at these levels, are you getting majors looking to take a position or to buy the company directly, hostile takeover, and so on? I will turn the question around. How is your share structure protecting you from a hostile takeover at a cheap price, and how attractive is it with such a shareholder structure for a major or another party to come in? And do we consider, for example, Mr. Friedman as a kind of a major, and so on and so forth?
Yeah, so I would say our top 8 shareholders own almost 46%. So they have a vision for the project like we do, that it's going to get much bigger. So hey, look, if somebody comes with a whopping offer, great, let's look at it. But the reality is that's not going to happen just a second. We've already had majors approach us and say, hey, we'll fund your next whatever you want, and the next stage and take an investment position. But we've said to them, hey, with respect, we're happy to share information with you, so that you're appraised with what we're doing and how. But we're not looking for your capital today. We'd rather keep that tension, so that you keep all the majors sort of looking. And basically, what we think is the key is to, grow the resource, keep your independence, use the financial investor money so that you preserve your independence. It's like free agency in sports. We want to be a free agent as long as possible.
Perfect. Last question that we have, and we have about a minute to answer that. Hold on a sec. I lost it in half a second. So basically, was about targeting and new zones. So if you could just tell us a bit, is there step out drilling being done, discovering new zones?
Yeah,
we discussed about what's deeper.
Yeah, so there's really 4 things shareholders and interested parties should be watching. One is the step out, the continued expansion of the line zone. So continuing to grow the line zone, which is awesome, right? Because it's a really lucrative mineralized area which we've already got, and we're continuing to grow that. So that's one. Second is Tiger Deep. Looks very prospective. Been identified by several drill holes that had good sniffs, but not the price. The Borehole AM has indicated this whole new target area. We're drilling that right now. Then you've got Lion Deep, which 64 hole 64 extension sort of hinted at, and now we sort of see the biggest off-hole anomaly we've ever seen in our lives at Lion, and we've been 100% successful on these off-hole anomalies. We eventually intersect it, so we'll test that. That won't start until, because it's a deeper hole, needs to be over frozen ground, so it won't start until early January. It'll take probably 3 weeks to get to target. It's a bigger, deeper hole, but we're super excited about that. So that's Lion Deep. And then on the hydrolands, we call it, right now we're on the fold and we're trying to drill the fold hinge. We haven't drilled the fold hinge yet, but we'll start on the fold hinge before Christmas. And we think the second half of Lion is out there. That's why we're so focused on getting that. And so we've got really 4 really exciting ways to grow. Will all 4 come in? Let's hope. But it's an exciting time to be a Power Metallic shareholder, that's for sure.
Okay, perfect. Well, that's all the time we had, and we have the next presenter that just joined as a panelist. So, Terry, thank you very much for your time. We'll for sure continue following your story. You guys are doing great work. It's really good to see, and we'll be happy to follow, especially what's happening with global opportunities within the next few weeks. There's surely going to be a big announcement. Saudi Arabia is a big, big thing in January, so we'll be looking forward to it.
Cheers. Take care, guys.
All
Thanks
right,
again.
thank
Bye.
you very much.